This is Business Edge. I'm Tolulope. Adeleru-Balogun. Africa is blessed with natural resources that can lead to economic development and help lift millions out of poverty. But is there a deadline to Africa using one of its most abundant natural resources? We'll get into that conversation today. And Africa is taking its future in its hand with sovereign wealth collaboration to boost investment returns. Well, up first, our African business headlines. South Africa's Inter-Ministerial Committee on Roads and Freight, in collaboration with road and freight industry stakeholders, has agreed upon and signed an 11-point action plan to address industry problems. These include foreign national recruiting, which has resulted in recent further blockades on the N3. The Road Freight Association, a signatory to the agreement, has claimed that point 11 of the action plan, which recommends the introduction of operating licenses for the business, says it will never agree to the point. The plan has received unanimous support from all other parties. In West Africa, fuel queues have once again hit major Nigerian cities like Lagos and Abuja, forcing motorists to spend hours at filling stations. On Monday evening, the Independent Petroleum Marketers Association of Nigeria announced that the current selling price of petrol in Africa's largest economy at 165 naira per litre is not effective for their operations and are insisting on selling at 180 naira per litre. Fuel does remain subsidized by the government, but scarcity has been an on and off occurrence since the Ukraine war started, and costs increased due to supply disruption. The government has not responded to the latest announcements by the marketers. The International Air Transport Association has said that Nigerian airlines and others across Africa will lose $700 million in 2022 due to a combination of the Russia-Ukraine war and COVID-19. The association said inflation, interest rates, and exchange rates would affect the growth of the aviation industry globally, stressing that countries should learn from the COVID-19 pandemic. The Global Air Association noted that the war in Ukraine would not escalate beyond its borders, but the rising fuel costs and a dampening demand due to lowered consumer sentiment would have a negative effect on the aviation sector. It said at $192 billion, fuel was aviation industry's largest cost item in 2022, 24% of overall costs, and up from 19% in 2021. Frederick Siedu, head of research at the African Export-Import Bank, AfriExim, says that the bank will support Elswadi Electric to establish an industrial zone in Tanzania. At the end of last year, Elswadi inaugurated the first phase of the company's industrial complex as a factory for cables, wires, transformers, and meters at an investment cost of $35 million, in addition to a logistics center on an area of 4,800 square meters. The industrial zone, established by Elswadi Industrial Development Company, a subsidiary of Elswadi Electric, will extend over an area of 2,200 million square meters. It aims to attract investments worth over $400 million from more than 100 investors across the region. Egypt's state-owned gas company and the U.S.-based Chevron Corporation have signed a preliminary agreement to explore sending natural gas from offshore Mediterranean fields to Egypt for processing and export. The memorandum of understanding signed by the Egyptian Natural Gas Holding Company and Chevron will consider transport, import, liquefaction, and export of natural gas from the Eastern Mediterranean. 2 years ago, Chevron acquired about a 40% stake in a massive natural gas field in the Mediterranean Sea off the coast of Israel. It also plans to drill its first exploration well in a concession area in the Eastern Mediterranean in September. Egypt's President Abdel Fattah al-Sisi has stressed that the government's full support will be there for the company's activities in Egypt, particularly in the fields of research, exploration, and production. 3 Gulf sovereign funds have signed an agreement with 9 African counterparts to boost investment on the continent. The deal was signed by Abu Dhabi's investment authority and holding firm ADQ, as well as Kuwait's investment authority, on the sidelines of the first meeting of the Africa Sovereign Investors Forum, a platform bringing together sovereign funds from Angola, Djibouti, Egypt, Ethiopia, Gabon, Ghana, Morocco, Nigeria, and Rwanda. According to ADQ CEO Mohammed Hassan Al-Suwaidi, ASIF will enable them to explore new opportunities with possible partners in Africa for ADQ and its portfolio firms. Now, after the break, we'll look at if Africa is facing a deadline in maximizing one of its most abundant natural resources, gas. One major international organization seems to think so. The conversation after this. The International Energy Agency has warned that Africa must act rapidly to capitalize on its massive natural gas reserves, which the world will only want until it can transition to lower carbon technologies. In its Africa Energy Outlook for 2022, the IEA noted that by the end of the decade, Africa could be able to export 30 billion cubic meters, of gas to Europe, which is now gas hungry as it seeks to lessen its dependency on Russia. The group of 31 mostly industrialized countries said in a groundbreaking outlook in 2021 that achieving a United Nations goal of net zero emissions by mid-century meant that from this year, no investments in new fossil fuels was necessary. The executive director, Fatih Birol, has said that Africa's development of gas did not contradict this. He added that the continent has borne the brunt of climate change, even though it has emitted just a tiny fraction of the emissions caused by the developed world, and it has limited time to earn hydrocarbon revenues. To reduce new developments and emissions, the IEA said flaring less methane could provide a third of new output. Oil and gas producing regions such as Africa have bristled at the idea that avoiding climate change may mean keeping resources in the ground. They say demand is robust, and developed states have enjoyed a centuries-long head start from hydrocarbons. While a fifth of the world's population lives in Africa, the continent has accounted for less than 3% of the world's energy-related carbon dioxide emissions so far and has the lowest emissions per capita of any region. And to get into this conversation with me, the question we're asking today is time running out for Africa to profit from its gas? Joining me from Cape Town, South Africa is Craig Morkel. He is the chairman of the Southern Africa Oil and Gas Alliance's Gas Economy team. Craig, welcome to the show. Thank you so much for joining me on Business Edge.
Hello, Africa.
So let's start this conversation with this. When we talk about a just energy transition and this climate change conversation, we hear many times that the West had a head start by using these same hydrocarbons that it's now looking to phase out. And when Africa wants to do the same is when this conversation has come up. So let's really look at it. How did the West really use its own hydrocarbons for its development and progress?
Well, there is a serious disconnect between various domestic policies and foreign policies within, especially the G7. And these countries are industrialized and wealthy, in part because of its extraction of African resources, including mineral and human resources during the period of slavery and colonization. Post-independence, that hasn't changed much, really. And we still see Africa underdeveloped, despite having its natural resources and excellent human resources. We should grab the opportunity now, whilst there are markets abroad in developed economies that needs Africa's resources, but to do so with far more fair partnerships than we had in the past.
And I like the fact that you did mention the fact that the West also did use Africa's resources. Do you think there's some hypocrisy in this conversation as well? This is the same West that preaches that Africa needs to be self-sufficient and needs to lift people out of poverty. It's the same West that for decades and centuries, companies have exploited our natural resources. But how do we lift people out of poverty if we cannot electrify our countries and our economies? How do we lift people out of poverty if you're asking us to keep money basically in the ground?
Sure. I think the key issue here is that the developed economies and their disconnect between foreign and domestic policies are effectively saying, do as we say, not as we do. and that is more than disingenuous. It is unfair, right? And so it perpetuates the legacy of colonialism that we have seen still devastating Africa, and we can get out of that. We can get out of that by firstly exploiting our natural resources and human resources and export as much of the products we have available to those markets, and secondly to use it for energy access in Africa. So one of the key things we need to do is to encourage investment from these wealthier countries in the equipment that we need to exploit Africa's natural resources, in particular gas. And what we need now is a commitment beyond the commitments already made. When the United Nations Framework Convention on Climate Change was signed, it included in that framework convention Article 9, which effectively was a commitment by all parties that they will receive money from developed economies as the largest emitters and ultimate creators of the challenge we now call climate change and global warming. They will make available funding under Article 9 for mitigation. Those commitments have been reneged on, and we've recently seen 5 governments approach South Africa with 8.5 billion dollars worth of money to fund a just energy transition. However, this is still being negotiated, and there will be lessons to be learnt from this interaction between South Africa and those developed economies that the rest of Africa could potentially learn from. And so we will be sharing as SAOGA, the South African Oil and Gas Alliance, and obviously through other fora, at AU level, at a regional level, our lessons from how this package is negotiated to fund Africa's energy transition to be more just. At present, it's not just.
Yeah. And I like the fact you brought up the South African situation, because many people do have their eyes on that to see how it develops and what lessons to be learned. But you've said this just energy transition phrase twice, and it was something that came up repeatedly at the African Development Bank annual meetings that held in Accra. So the bank's president said Africa cannot be poor in the course of this transition when it has natural resources in the ground. So what does a just energy transition look like for the continent, especially in the conversation in the context around the continent's natural gas reserves?
Yeah, it's not only about our historical contribution to greenhouse gas emissions and global warming. It's also about our future contribution to global warming. If we can cap it within the nationally determined contributions made at COP26, then there should be no problem, right? Then we can keep global temperatures below 1.5 degrees Celsius. Now, we have to note from the International Energy Agency's Africa Energy Outlook 2022 report that Africa has thus far contributed no more than 3% of greenhouse gas emissions that cause global warming. And the comment from the IEA that should Africa utilize its gas resources, it will not make a significant difference, because it is the developed economies that need to reduce their greenhouse gas emissions more so than Africa utilizing its natural resources for development, while still taking the environment into account, so that we have some harmonization between developmental imperatives and environmental imperatives. These are not mutually exclusive. And if we can do it responsibly within certain limits, then there should be no rational reason why Africa cannot use its gas resources for its socioeconomic or developmental benefits going into the future.
Okay, so Craig, Let me pause you here. Let's take a quick break because we are looking at a few things around also the Russia situation and how we are basically exporting our natural gas as of now and why we're not doing more than we currently are doing. So I want us to pick up the thread of that conversation after the break. Then we'll also look at the disposition internationally. Is there still a climate and investment appetite for African natural gas? Are there people who are ready to put the money forward to invest in this natural resource? We'll talk about that after this. Still with me is Craig Morkel. He's the chairman, the Southern Africa Oil and Gas Alliance's gas economy team, as we look at how long Africa has to maximize its natural gas resources. Now, as Europe has sought to wean itself off of Russian gas and oil, it has been looking towards the continent. The African continent has abundant oil and gas reserves. In 2017, Africa reportedly had 148.6 trillion cubic meters of proven gas reserves, more than 7% of the global reserves. In 2019, European Union imported about 108 billion cubic meters of LNG from Africa, over 12 billion of which came from Nigeria. It's also been said that African producers have more reserves than needed for their own markets and are therefore predestined for export. But when it came time for Africa to really step up its gas exporting, we seem to be struggling. So, Craig, let's get back to that. We're seeing that the EU is looking for an alternative to the Russian situation. We have the proven reserves. Even before this situation came up, we were still struggling to really be seen as a gas powerhouse outside of the continent, even internally as well. Why were there challenges, or why are there challenges with Africa's natural gas exploration, exportation, importation, even usage here on the continent?
Well, I think we have political leaders in Africa who need to be engaging with their counterparts at the G7 and G20 and really keeping this at the top of their agenda. Again, let me repeat that there are countries with gas who are utilizing their gas, but at the same time are taking the decision not to support gas development elsewhere. Therefore, linking to your earlier news item on the African sovereign wealth funds and their gathering, that is one source of funding where they understand and appreciate the role of gas in our future global energy mix and have the resources to invest in Africa's development of gas reserves. The exploitation of this is not only to export to the rest of the world. We certainly must utilize it to support our industrialization. And by that, I mean support for not only electricity, but also the direct use of gas in industrial applications, in food production, because you need gas for fertilizer production. You need gas for manufacturing of cement that would be required for Africa's housing shortages. You need gas to also fuel vehicles, whether they be road, rail, or maritime vessels. Gas is a cheaper and cleaner alternative in most cases. And then we obviously need gas for electricity. We need to take note that the majority of people in Africa at present still use biomass or wood to cook with, to heat with, right? And whilst we could potentially then electrify most of Africa, there are about 70% plus that already is not necessarily going to depend on electrification. They can apply gas directly. And so we shouldn't try to electrify everything too quickly, but we do meet to our commitments to climate change targets and greenhouse gas emissions reductions. So the question then becomes, how much renewable energy would we need? How much gas would we need? And so when we do our energy planning on a country by country basis, a region by region basis, and Africa as a continent, that energy planning needs to take into account three key factors. One, affordability. Two, energy security to avoid load shedding and electricity interruptions. And thirdly, environmental sustainability. These three key factors need to be considered by energy planners in Africa and communicate that at COP27 later this year.
Okay, so let me ask, you did mention, of course, that there are some gas producers who've made the decision to no longer have investments. And let's get into that really, because the IEA pointed out that 31 of its member countries basically are unlikely to have new fossil fuel investments this year and going forward. But these countries are also very big when it comes to their global energy giants operating to explore and develop in Africa's gas field. So now the question is there still an interest? Is there still an appetite? What's the global disposition towards investing in Africa's gas development?
Well, they have a desperate need for energy. I mean, we see in Europe with the Russian-Ukraine war what impact supply chain disruptions would have. We saw supply chain disruptions with COVID-19 vaccines as well. And what are the lessons to learn from them? Well, we have to become as self-sufficient as possible in each African country and as a continent. How do we become self-sufficient in terms of energy? Well, we cannot import solar PV panels and wind turbines only when we have natural resources that we could use and potentially have a portion of that local gas resources denominated in local currency, so we don't expose it to rand-dollar exchange rates and foreign indices. But a portion of that gas must obviously be exported so that we can earn foreign currency. With that wealth, we could then become more self-sufficient and not go to development finance institutions, multilateral development banks, such as the IMF and so on, and fall into a debt trap. We can avoid that. And perhaps the sovereign wealth funds of gas-producing countries outside of Africa could assist those inside Africa to become self-sufficient and partner more fairly than the partnerships have been to date. We have to ask ourselves the question, when we issue and grant a concession for exploration and production in Africa, who then owns the concession and who owns the molecules of gas once that concession has been granted? Is it still owned by Africa, or is it now owned by a foreign multinational company that has the rights to decide whether or not to extract it, whether or not to market it, and where that market should ideally be? They also, of course, determine price. What do we need to change? We need to change our legal and regulatory frameworks. We need to consider changing our fiscal policies, yet make it investor-friendly still to the developed economies that need our gas.
So your answer brings up a question that seems to be a chicken and egg question in this conversation. Africa needs that gas out of the ground for its own economies. We need to electrify the continent so we can push our economies forward. But we also need the foreign exchange that exporting the gas can bring. Is there a way for these to sort of coexist? Because the IEA says that African countries, if they're able to develop their gas industries and economies, at least by 2030, there'll be sufficient capacity to deliver 2/3 of it for domestic needs and then to export. Does it have to be a priority? Must it be an either or? Is there a way for this to run concurrently without one or the other suffering?
Concurrently, I believe that there is an opportunity to do both. We can utilize a significant portion of our indigenous gas resources for our economic development and do so in an environmentally sustainable or responsible manner. I think what many people who criticize gas have neglected to comment on is that in the last IPCC report, the International Panel of Experts linked to the COP26 and UN Framework Convention on Climate Change, these scientists have said that gas has a particular green global warming potential it has a particular atmospheric lifespan and can contribute to global warming, but technologies exist to stop the leakage of methane, natural gas, and to seal it. And that these technologies are mature, they exist already, and are affordable. So we can deal with that in Africa, and not simply flare our gas or let it stay in the ground. We can use it responsibly, right?
Okay, so my final question to you, Craig. There seems to be a timeline and some sort of deadline. The world is trying to move to the barest minimum of carbon emissions by 2060. The IEA is saying that African economies really need to develop their gas reserves by at least 2030, giving us at least 30 years to enjoy before the world completely cuts it off. But 30 years is not too far away, or rather 2020 is not too far away. So one, do you think that time is running out for African economies and African countries to really maximize their gas reserves? And two, that 2060 deadline, is it really for us or is it really more for the West? Because they've had a head start, so they need to give Africa its own opportunity to catch up.
Yeah, so the arguments being put forward by those who are opposed to gas is that gas anywhere in the world has a global warming impact. And that sounds logical. But it's the volume of greenhouse gas emissions that each country would emit. And if we can keep it low enough, then it has a minimal impact on the global greenhouse warming gases. Because Africa's utilization of it would be significantly lower than has historically been the case in developed economies. So that's what I mean by using it in a responsible manner, yet meet our affordability, targets for, the cost of energy. Not only electricity, as I said, but also the thermal applications of gas for fertilizer and food security. Fertilizer in short supply at present. It is also probably the best technology with which to desalinate water in water-scarce countries, as they are in Africa. And it can certainly power the transport industry, maritime, road, and rail. So we need to then decide in our energy planning, and hopefully do so before COP27, that we have this resource, it is accessible, we need to develop better investment strategies to attract sovereign wealth funds, in particular from gas-producing countries. They understand the dynamics and the risks, and they have an appetite, perhaps more of an appetite than those who are telling us, do as we say, not as we do.
All right, Craig, we'll leave it at that. I know the conversations around the just energy transition and, of course, this climate change conversation in Africa's natural resources will continue up to November and even beyond. And we look forward to talking with you again.
Thank you.
All right. 148.6 trillion cubic meters of proven gas reserves. That is what is on the continent. And some say that's money in the ground. Let's take a quick time out now. Lekan Onabanjo is standing by with international business news.
It's a lovely Tuesday morning. Welcome to International Business News. I am Lekan Onabanjo, and our starting point is in Asia. China's Xinjiang region is about to have its merchandise join the list of cotton, tomatoes, and other imports banned in the U.S. from Tuesday. As new rules come into force, under the regulations, firms will have to prove that imports from the region are not produced using forced labor. U.S. officials have said members of the minority Uyghur community in the region, who are predominantly Muslims, have been detained and made to work. China has repeatedly rejected accusations that it is holding Uyghurs in internment camps in Xinjiang. European stocks are expected to be higher on Tuesday, continuing a recovery seen at the start of the week. The positive open for the Europe comes as global markets appear to be staging a comeback rally after a tumultuous past week. Asia-Pacific markets were mostly buoyant overnight, and Bitcoin continued a recent rebound, while U.S. stock futures rose. The rebound in positive sentiment comes after global market turbulence as investors assessed the prospect of more aggressive Federal Reserve rate hikes and rising chances of recession. Now, some 40,000 members of the Rail, Maritime and Transport Union on Network Rail and 13 train operators in Britain are taking industrial action today after last-ditch talks failed to resolve a dispute over pay, jobs and working conditions. Consequently, Britons are being hit by severe travel disruption, with only a fifth of train services running today due to the biggest national rail strike in 33 years. Motorists have been warned of increased traffic as train passengers switch to road transport. Let's also tell you that EasyJet has agreed to buy 56 planes from Airbus SAS, costing up to $6.5 billion in total as part of a fleet refresh that will replace older models and reduce future fuel costs. The budget airline said in a statement that Airbus will supply the aircraft between 2026 and 2029 to secure certainty and maintain operational scale, with the manufacturer's delivery slots becoming increasingly scarce. No delivery slots would otherwise be available before 2027. The announcement comes as the flight industry is battling revised schedules and cancelled flights due to a shortage of staff at airports. The post-COVID-19 bottleneck has hit passengers in Europe hard, with Gatwick and Amsterdam airports capping flights this summer. Finally, crude oil prices rose 1% on Tuesday, clawing back more of last week's losses as investors focused on tight supplies of crude and fuel products rather than concerns about recession dampening demand going forward. Brent crude futures rose $1.08 or about 1% to $115.21 a barrel at 0400 GMT, adding to a 0.9% gain on Monday. The benchmark contract fell 7.3% last week in its first weekly fall in 5. U.S. West Texas Intermediate crude futures for July, which expires later on Tuesday, rose to $112.01 a barrel, up by $2.45 or 2.2% from Friday's close. There was no settlement on Monday, which was a U.S. public holiday. WTI dropped 9.2% last week. And that's all on international business news. I tell you, there's been a lot of movement in the crypto market, and we will get into the hows and whys after this break. You're welcome to Crypto Watch, and on this side of the conversation, we'll be considering Bitcoin's recovery, though investors are still scared of a possible domino effect. And according to what we know, Bitcoin and Ethereum rose for a third day, continuing to pull away from the 18-month lows endured at the end of last week, mirroring a rebound in wider global markets. The largest coin by market value rose 5.2% to $21,098, while Ethereum was up 7.2% at $1,157. However, the industry remained on edge as on Monday, as Bitcoin held just above $20,000, and investors feared that problems at major crypto players could unleash a wider market shakeout. So this is Crypto Watch, and joining me is Ola Atose, founder and CEO Koinkoin Exchange. Welcome, Ola.
Yes, a pleasure. Thank you for having me, Lekan.
All right, so it's been topsy-turvy time for holders and investors in cryptocurrency. A lot of people are saying they are losing so much money because the values are depreciating, even as there has been a crash. Now, tell us, why do we have this sort of volatility or this unpredictability according to what we've heard about cryptocurrency? And of course, why is it bleeding? Because it is said to be the future of transactions.
Right. Yes, note the use of the word bleeding there. I wouldn't say it's bleeding. Of course, the markets have seen turbulent moments, led on mostly by the reserve, rate hike last week. Of course, as noted by the Fed themselves, we saw a situation where markets, the rate obviously rose, and all markets, literally crashed. So my view is Bitcoin, Ethereum, and all crypto markets are in essence following, this sort of same, move downwards. with the looming recession perhaps being a concern, and a number of other key metrics across global economies, and sort of fear in the market, if you like. With regards to Bitcoin, especially, it's no different from any other market. We've seen situations in the past where the markets have taken a dive. In previous times, Bitcoin has lost 90% of its value. And we've sort of been here before, where we have these conversations about, whether Bitcoin will continue to lose its value. That said, my view is it's all part of, what we see in markets, and following what we saw over the weekend. And I think a point to note is Bitcoin does trade over the weekend. We saw a dip to, I think, the 17,000 region. Once that happened, a number of investors, speculators viewed Bitcoin as now cheap, and a number of people dove into the market to buy. Hence, we're seeing these recovery levels.
All right, we'll quickly go on a break. Ola, when we return, we get to look at what can be done to actually stem the tide of this rise and fall. Thanks for staying with us on Crypto Watch. We are looking at the issue of the Bitcoin and how it is recovering. And Ola is still here with me even as we continue with the discussion. Now, the crypto market, Ola, has been free falling, and participants are actually worried that there's a possibility of a domino effect whereby investors will tend to pull out their cash, and that could cause a spiraling effect on all the ecosystem of the market, where all the values and all the monies crash. And of course, the ecosystem could also lose its entire value, so to speak. So tell us, is there anything that we can do or that can be done to actually stem the tide?
Well, I mean, if you notice, the idea, most of the players in the crypto market, we have some institutional investors who see, Bitcoin as a limited commodity, and as such, will always look to buy more when it's deemed as cheap. You'd see the same phenomenon in stocks. If stocks or particular stocks fall below a certain level, investors begin speculating that it's cheap, and they'll then pile back in. So whilst we have seen a deeper dive in Bitcoin, I note in previous cycles, we've seen Bitcoin lose up to 90% of its value and then recover. So the view of most of the sort of larger, if you like, investors, some institutional investors in Bitcoin, is if it gets cheap, it's their opportunity to sort of buy back in. The same thoughts with the retail investors. Their view is if it goes low enough or goes too low, given that we've seen highs of 69,000, we're now down at 17,000. Investors, both retail and institutional investors, see an opportunity to sort of go in and buy. And that's what we're seeing. So obviously the recovery started, I believe, mostly on Sunday, given that the crypto markets opened over the weekend. And we've seen that recovery sort of push into, yesterday's session and today's session. We're certainly looking to see what will happen later on today when the U.S. markets officially open. We're curious to see how that will affect the markets.
All right, now, Ola, we understand that Bitcoin lost about 55% of its value, though it rose 7.6%. So what is that? What is the reason for that respite? And would you also advise Bitcoin holders, of course, to hold on to what they have, or would you say that they should sell at this particular time?
Well, unfortunately, Lekan, we're not in the business of telling people what to do with their money. But the view, I have, and this is, an opinion, my own opinion, if you like, is that, the crypto market is still new. It's still in its infancy, and it's out there with all the major markets. Whatever happens to the major markets, be it NASDAQ or the Dow, we're seeing the same in Bitcoin. Sometimes they detach, but most times, when one falls, the other falls. So that's normal market behavior. And in some regard, that's a good thing. As the market matures more and more, you can expect the volatility to decrease. Now, in terms of Bitcoin holders, there are Bitcoin holders who bought Bitcoin when it was considerably cheaper. at $30, $300, and they'd tell you themselves that they have no intention of selling. On the flip side, you have a lot of newcomers who bought, Bitcoin when it was much higher. Some of those players are the largest players in the Bitcoin market, such as MicroStrategy. And the view they have is Bitcoin perhaps should be regulated by regulators across the world, which is something we also welcome, a view to bring the regulators in so people can be better informed of what they're doing with their money and how Bitcoin can actually work for everyone.
And finally, Ola, let's do a bit of comparison. Now, the fall in the crypto markets mirrors what is going on in the equities market, according to what we heard, where U.S. stocks have seen their biggest weekly losses in 2 years amid fears of hiked interest rates. So tell us, what's the similarity or the dissimilarity between equities and, of course, crypto?
Well, I mean, one of the, I guess, the best way to look at it is they're both, dollar denominated, right? So Bitcoin is priced in dollars. We talk about Bitcoin having a dollar value. Of course, stocks, the NASDAQ, for example, it's just a U.S. stock exchange. The largest markets are in the U.S. The reserve system of the world is, based on the dollar. So whatever the Fed does typically with raising rates to stem inflation is likely to affect all dollar-denominated markets, which is in essence almost everything. So as a result, what you see in one market will be reflected in another. And of course, in the modern era, we now have a lot of robots that do the trading for us, and they're literally replicating their actions across the board. That's why we sort of see this, NASDAQ moves, Bitcoin moves. They both go down, they both come up. Obviously, NASDAQ is a much more mature market. There's a lot more liquidity. There's a lot, the underlying there is real stocks, real companies, whereas Bitcoin is based on specific algorithms. And a lot of people will argue that that's completely different from stocks. As a result, it would lose value quicker than stocks do. That said, there are a lot of investors who see Bitcoin as ultimately in the future, as it matures, as perhaps a hedge to inflation, amongst other things, or as a commodity in itself, because it's limited in value.
Thank you so much, Ola Atose. Thanks for joining us.
It's always a pleasure, Lekan. Thank you.
Okay, so if there's anything digital investors fear the most, it is the volatility and unpredictability of cryptocurrencies. Today, you could be cashing out, tomorrow it could be crashing, and stocks do rise and fall, some people will say, but there's a difference between tangibility and intangibility. So Tolu, you would want to say maybe if there's some sort of regulation, as Ola has said, maybe that would help. But then I will bring Tolu on later on. We get to go on this break, and when we return, it will be time for NC4 to watch. Do stay with us. On NC4 to watch, these are the stories that we are tracking. The National Union of Metal Workers of South Africa, NUMSA, will be in the Labour Court today in Johannesburg to defend the right to strike. At least 4,000 members and workers are on strike at the Impala Platinum Mines in Rustenburg in the northwest. The Labour group said its members have been forced into embarking on strike because they are tired of being exploited by those they termed parasitic contractors. Workers employed by contractors at Implats are paid a fraction of what permanent workers are earning. Away from that, Nigerian manufacturers reduced their investments in the economy by 61% between 2018 and 2021, according to analysis from Economic Reviews of the Manufacturers Association of Nigeria, MAN. Investments made by manufacturers fell by 552 billion naira in 2018 to 217.22 billion naira in 2021. Looking at the next story, the Minister for Food and Agriculture, Dr. Owusu Afriyo-Koto, claims there is no food shortage in Ghana. A report by the Ghana News Agency reiterating this despite a rising food price and the fact that prices of food and some of the factors are said to be driving up inflation in the country. Finally, according to the numbers presented by StockApps.com, the online education industry is set to make $148.57 billion in 2022 as online education has become a prominent industry in the last decade. And that's all on NC4 to watch. Over to Tolu now.
Thank you so much, Lekan. And that's the show we have for you today. Don't forget that you can, of course, watch us on the platforms we're available. Download our mobile app, subscribe to our YouTube channel, and, of course, follow us on all of our social media platforms. And you will always be part of all of our conversations. At the top of the 12 o'clock West African time hour, we have News Central Now standing by for you with all the latest from here on the continent and beyond. I'm Tolulope. Adeleru-Balogun. Have a good one.